Good morning. It's Harvey Jackson. Um, yeah, nothing like more politics in my headline, but let's just get into it here. Carney is wrong about Canada when it comes to the economy and everything else he said that we was going to fix with the U.S., but not wrong with his Brookfield shares. You can see here GDP growth for the first 365 days was down negative 0.06%, but his Brookfield asset management shares are up 16.51%. That was put out by the conservatives there.
US and on Canada economically?
Well, ultimately, the steps that the president is taking against Canada, contemplating, I guess, as well against Mexico, China, others, and threatening the world are going to rebound negatively on the United States. They're going to hit growth. They're going to move up inflation. They're going to raise interest rates. They're going to damage the U.S.'s reputation around the world. I mean, let's be absolutely clear. This is the second time in less than 10 years, less than 8 years, that the United States has, in effect, ripped up a trade agreement with its closest trading partner that it negotiated in good faith.
And there's no doubt from your perspective that Mexico-Canada agreement, what used to be NAFTA, has been ripped up tonight.
Well, it's the U.S. is violating it.
Yeah, I just want to put this in because he was wrong about everything that he keeps on talking about, and the USMCA or CUSMA, whatever we want to call it, but it's definitely up for probably some tough negotiations for sure. So this hasn't been making the news, and I should maybe have changed the title here, but U.S. forced labor tariffs, which U.S. imposed on 60 different countries, including Canada, a 10% tariff on forced labor. And, when you see the EV vehicle mandate and, allowing 49,000 vehicles from China, it's not respecting the forced labor tariffs that the U.S. and rest of the world had put on China. So we'll have to see how this plays out, whether he's going to make some concessions to try to keep this going. There's digital service tax that he's got on there that he's now paring back. Instead of charging those companies, he's just print some more money. Yeah, GDP growth. Just follow on here. You can see that we're in a recession. How many times we've been in a recession? But in the last 3 times now since the Liberal government here. Lebanon ceasefire raises hopes for progress of Iran deal. Israel and Lebanon agreed to implement ceasefire. Ceasefire in Lebanon tied to broader U.S.-Iran negotiations. So finally, U.S. has got some pressure on Israel. In the reverse, it seems to be Israel having the pressure on the U.S. It seems, but it's finally maybe working in their favor here. Diesel or just inventories. So the U.S. Commercial crude oil inventories, excluding the strategic reserves, it is not quite at its lowest point. But when you look at the big three, the crude, gasoline, and distillates, we're very close. India monsoon reaches Kerala, and there's a couple of different things I just highlighted in here in this Reuters article. The monsoon delivers almost 70% of the rainfall needed to water farms producing rice, corn, cotton, soybeans, sugarcane to replenish aquifers and reserves. And the conditions are favorable to advance further in Goa, parts of, I can't even say some of these states. But India is forecast to receive below average rainfall in June, less than 92% of the long period average. And that's due to the El Nino. And if there's a country that gets affected by El Nino the most, it seems to be India. Some warming weather going into the weekend. We're going to be getting some warmer temperatures again, but it seems to be driving some more rainfall as well. So past rainfall, you can see the foothills definitely, and into central Alberta definitely got some shots of rain in the last 72 hours. There's been some bands with some severe stuff going across Manitoba as well. Here's current snapshot. So rain is falling in various different areas here. And you can see that over the weekend, it looks like we still got some area that we can actually maybe get some seeding, but then the rain starts to come here as we get into the later part of next week. Manitoba gets covered, and then eastern Saskatchewan is covered as well. But then it looks like the whole growing area, major growing area of all grains seem to be get blanketed with moisture. So let's just a quick look at Europe here. Good moisture right across all of Europe as well, and that even, but it seems to get little less over here, but hard to say if that's going to be impactful or not. But whether Russia gets deficient. Here you can see that there's rain in that growing area I highlighted a couple of days ago. Quick look at the markets. We had a strong market yesterday of canola, and half of those gains are taken away today. November canola at $7.92, rapeseed down $6 at $6.27. Soybean oil is down 21 points at 78.50. Palm oil is down 68 ringgits at 4,537. Crude oil is down $1 at $95. Diesel fuel is down 8 cents, and soybeans are down as well at 6.25 cents at 11.20 or 11.47. And your spring wheat is basically unchanged, up a penny. Hard red winter is down a penny, and here Chicago is down a penny as well. Corn is down 4.5, and the Canadian dollar is down again. So quick look at it. So that pop up, and half of those losses seem to be taken away in both the November and the July contracts. Predictions, I am not certain. It's like what's making this market rise as fast as it has. Could be slow planting. It could be inventory levels. There's even one thing that I was saying, because the inventory levels are so low, it could start pointing towards possible adjustments from StatsCan at some point for reducing yield from last year as well. So European rapeseed, it peaked above that breakout level yesterday, and now it's below it again. Soybean oil futures didn't have that same leg that the canola had. It only had a fraction of the move yesterday, where canola had like a 2% move. Here's your soybeans, and it's been doing nothing but going down. And your crude or your palm oil futures did have those gains and just about erased all those gains from yesterday as well. Looks like we're filling this gap and pulling back some today. Here's your diesel fuel. As inventories keep tightening up, it just keeps on going up there, and pause there today. Here's your Canadian dollar futures, and we did have one positive day there in the whole month of May, and we are right at this previous low that we made here. The next level is way down here if we're going to keep going, but there's a couple of reports coming up this week and next week of Fed interest rates that we're going to be talking about. Here's the makeup of the Canadian dollar. So you can see the US dollar hasn't done anything because the Canadian economy has had so much pressure on it from its release of its data since last Friday as well, that we continue to move down, and some of these other basket that hold a higher percentage of the US dollar index are not having the same struggle that the Canadian economy is having. Here's wheat. It looks like the Canadian dollar too. It just keeps on falling, and it's up at this pivot point. Looks like it's still got some direction to go down. Here's your 200-day moving average, another 35 cents lower. Same thing with the November contract. Wait, not quite 35 cents lower though, only 25. Chicago wheat futures, same thing. Pivot point looking at going down. Here, milling wheat, basically in this channel and trying to break lower out of this channel. And you got to remember that they're going to be harvesting probably in a few weeks to a month here. Just a quick look at the markets here. Live cattle are at this 50% retracement value of the market move from the high to the low that's here. So we've lost half of the market high, from the high to now trying to break lower. Here's your feeder cattle at the same kind of point. Hog futures look like we've got a little bit of recovery, maybe created a floor